Hi, I'm Ian McGugan of the Report on Business, and I'm here today with my good friend and colleague, Luke Kawa. Luke, I'm really happy you're so discreet because I have a rather embarrassing personal issue.
Well, do share.
It's this. After a career of arguing people out of gold, out of pouring scorn on it, I'm beginning to feel the allure of the golden medal.
Well, Ian, I think the best way to make money off gold is the way that Jeremy Irons did it in Die Hard with a Vengeance. You break into the New York Fed and you take it out. Besides that, what's your thesis?
My thesis is simple. It's basically gold, especially after the good jobs report in the U.S., is trading around a 5-year low. It's an asset that people rush to in times of economic distress. At the moment, nobody sees economic distress ahead. I think there's a good argument that people are underestimating the chances of a Eurozone bust-up, of the Greece situation turning worse. And I think if that does come to pass, we'll see people pouring into gold. You know, I'm not suggesting gold goes to $2,000 an ounce, but I could see it having a nice 10% run-up from here.
Well, I'm not one to, rush in front of a bulldozer to grab a dime. And I think you might be overlooking what I think is the start of a big secular trend, the rise of the U.S. dollar. I think, sure, with monetary easing, gold could rise in euros and yen and renminbi, but I don't think gold's going to make up any ground with the U.S. dollar continuing to rise. I believe the DXY, the U.S. dollar index, is at near 11-year highs. I think that's going to keep on going.
Sure. I know this sort of greenbacks up, gold down. And, it's been true in broad strokes over the years. But recently, there hasn't been, a great instance of that. We've seen the U.S. dollar rise strongly, and gold has basically leveled off over the past couple of years.
Well, I think one thing that hasn't been working against gold that might start to in the near future, again in earnest, is real rates. I see the U.S. economy improving, real rates rising, no crazy inflation, and I think that's going to be kryptonite for gold.
I hear you, but, let me say this, that if things go along as they are now, perhaps gold does nothing. But if we see China verge on a hard landing, maybe even slide into a real hard landing, we're going to see people rush into gold.
There's definitely a relationship between economic stress and people rushing to the perceived safe haven of gold. But if you want to look at the ratio of stocks to gold, that's something that peaked in 2000 and it hit its bottom in about 2011 at the time of the U.S. debt ceiling crisis and when the housing market was just finally bottoming out. I don't think we're ever going to have the things we saw in that decade with 2 wars, a huge terrorist attack, and a housing bust. I don't think we're going to have anything in the next decade that sparks the amount of fear that did.
Luke, I thank you for talking me off the ledge. Really and truly, I thank you for that. And you won't mention this gold infatuation to anyone, will you? It's just us.
No, just I thank you for not bringing your tinfoil hat either.
You're welcome.